Last year, Standard Chartered Bank put out a report expecting the Bitcoin price to reach $100,000 by the end of 2024. Bitcoin hasn't quite reached $100,000 yet, although it has surpassed new all-time highs very briefly. Could $100,000 be realistic for the end of the year, you think?
I do. I do think 100,000 is very realistic before the end of the year. We use a series of models to help us understand if Bitcoin is overvalued, undervalued, or fairly valued. One is trendline analysis, and that shows us that Bitcoin today should be worth more than $130,000. And what that model shows us is that over this next halving cycle in 2024 into 2025, when we enter that 12 to 18 month post-halving window, that this has the opportunity to go upwards of $1 million during this halving cycle. Now, that seems like a lot, but if you look at the math behind the model, that is how the model plays out.
What has driven Bitcoin to new highs, and can this rally be sustained? Well, our next guest believes that not only can the momentum be sustained, but we can potentially see more than $100,000 by the end of this year or sometime this year. And in fact, the next halving cycle, which is coming up soon, could drive the Bitcoin price up to close to $1 million, not immediately, of course, but over the next 12 to 18 months. This is a ceiling, a high forecast for Bitcoin, and he's going to explain why. He is Brian Dixon, CEO of Off the Chain Capital. We'll be talking about not just Bitcoin, but also the altcoin markets and the crypto landscape overall, and the major news events around cryptos right now. First, a word from our sponsor, iTrust Capital, an IRA that offers 35 crypto assets, the lowest trading fees in the crypto IRA space. If you're over 18 and you want to open a new account with cash or roll over an existing account, click on iTrust.capital/David in the link down below to learn more about iTrust's unique benefits, especially regarding taxes. Now, with Bitcoin's price going up to close to all-time highs and staying above $65,000, you may consider an IRA as a safe place to park your Bitcoin price returns. Brian, welcome to the show. Good to see you. Thanks for being here.
Thanks so much for having me. I appreciate it.
Let's first talk about what happened over the last couple of weeks. Do a bit of a history recap before we get your outlook. People have been asking me, where's $100,000 Bitcoin? I'm going to ask you that question in just a bit. But first, let's talk about what happened before, what could happen next. Your primary drivers of the Bitcoin price, I mean, certainly the NASDAQ has seen new highs. The Dow Jones have seen new highs. So it's been generally a risk-on appetite for risk assets overall, including stocks. So no surprise, Bitcoin has been doing well all year. But to breach new all-time highs took an extra impetus. What was that X factor, Brian?
I believe it was the Bitcoin ETFs. So what we're seeing with these Bitcoin ETFs today in recent weeks is that they're creating 10 to 15 times more daily demand than the daily supply being created by the Bitcoin network. And another really important point in terms of this increasing demand is that approximately 45% of the Bitcoin in existence hasn't moved in 3 years, according to a recent article by Blockworks. 70% of Bitcoin in existence hasn't moved in over a year, according to Glassnode. So when you look at the data, if 70% of the Bitcoin in existence hasn't moved in over a year, and these ETF demand components are creating 10 to 15 times more demand, there's only 30% of the tradable market that the ETFs can actually go out and accumulate this Bitcoin from. So what we're seeing with that is that's going to continue to create price appreciation because people are holding and they're going to command a higher price for them to be willing to sell.
Just on that note, do we know what the 70% is or where it could be? Is it whales holding and not selling because they're hodling, so to speak? Is it just lost keys? What's the 70%?
It's predominantly whales that are holding or people that are just long-term holders that aren't even necessarily whales, just people that have accumulated a position but don't want to sell it.
Okay. And is it possible then that with the advent of ETFs, they could find ways to sell, well, just a reason to sell because there's more demand?
They could. Yeah, there absolutely is that component. And I think as we see price appreciation, we are going to see a percentage of those people that want to take some profits off the table. But what's interesting about this dynamic is in terms of those percentages that I laid out in the how high they are, it's the highest I've ever seen in the space since I got involved in 2012.
This Bitcoin ETF has been talked about for months and months, even all throughout last year. Presumably, the price appreciation should have been priced in, but evidently it wasn't because it wasn't fully priced in. So certainly there was an aspect of the Bitcoin ETF launch that surprised the market, so to speak. Otherwise, the price wouldn't have moved. I mean, if everything went just according to expectations, it would have just capped around $45,000-$50,000, but it didn't. What was the surprise component in your opinion?
I just think the tremendous amount of inflows.
Okay.
Now we're seeing BlackRock go in the market. They have this global powerhouse of a marketing machine that they're going to all their institutional and ultra high net worth clients, because BlackRock's ETF inflows have just been crazy in terms of the amount that they've seen come in. I believe it was the first ETF in history to reach 10 billion in ETF inflows in the fastest amount of time. So that's really interesting to see. I also heard that in recent weeks, there was reports that during a BlackRock meeting to its ultra high net worth clients, one of their analysts recommended that 28% of one's portfolio in Bitcoin is not unreasonable. 28%. Now, that is a very large amount from what we saw with them just 12 to 18 months ago when they were recommending closer to a 1 to 5% range.
Ultimately, with the launch of the Bitcoin ETF, which types of investors would be most impacted or could benefit the most from this new asset class, if you want to call it that?
I think largely the institutions, because what's happened before is that these institutional investors have very strict mandates in how they can allocate to an asset class. And because of how Bitcoin is custodied and because of these emerging crypto exchanges, I think a lot of institutional investors had challenges with finding qualified custodians, which now we see are more prevalent in the market because as SEC rules, if you're a larger institution like this for custody, it has to be a qualified custodian. However, with the ETFs, now we're seeing an on-ramp that reduces the friction where they're buying it just like they would any other security within their portfolio. So I think that's something that's going to continue to evolve over time. And these large institutions now have an access point that's in alignment with regulatory standards, whereas before it was more challenging.
The Bitcoin dominance chart that I'll show on the screen, it's at 54%, 53.8%. It's been climbing all throughout 2023. Bottoming around 40%. I mean, certainly not as high as 2020 levels, which was around 70%, but it's been climbing ever since last year. Would you make this statement or even the argument that this rally in Bitcoin is really Bitcoin specific? I know Ethereum has gone up as well, but we're not really seeing a crypto bull rally yet as much as we're seeing just a Bitcoin bull rally.
I would agree with that. So in the short term right now, we're seeing the Bitcoin bull rally begin. However, what we've seen historically in past bull cycles is that once Bitcoin starts ramping up, a lot of the other digital assets will follow as well. And so I believe we will see that through that 12 to 18 month window post Bitcoin halving that's due to occur next month in April. But as of lately, Bitcoin has been, one of the predominant assets that's increased in value. But now we're starting to see a lot more appreciation in other assets as well, such as Solana and Binance. Those are really starting to appreciate quickly also.
And just on that note, Ethereum is up about 50% since January, late January. So was that as a result of Ethereum just following Bitcoin, or were there other factors specific to Ethereum there?
I believe the biggest factor that was creating the price appreciation in Ethereum was the anticipation of an Ethereum ETF, far more than anything else. I think people saw how well it went when the Bitcoin ETF went live, and then a month to two later, we're seeing these tremendous inflows. And so they were trying to expect a similar result with Ethereum, and I believe they were allocating to it in advance of a decision for an Ethereum ETF in hopes that a similar pattern would play out.
What, just from a regulatory standpoint, would there be any difference between an Ethereum ETF and a Bitcoin ETF? I know the CFTC has classified Bitcoin as a commodity. I believe it's the only crypto to be classified as a commodity. Everything else would be a security. So I'm just wondering if there's more regulatory hurdles that the Ethereum network has to go through for ETF to be approved.
I believe it would be largely similar because you're going to have the same kind of mechanics in place. You're going to have surveillance sharing agreements in place. You're going to have custody in place. And you're going to have the same type of redemption and withdrawal structures in place. So it's largely going to be the same. I think what really is going to be looked at is who's ultimately going to govern that. Is it the CFTC if Ethereum is governed as a commodity? Is it the SEC if it's governed as a security? But ultimately, if they're creating the ETF wrapper, that is creating a security. So the ETF itself would likely be viewed by the SEC.
Ultimately, Brian, is the crypto winter over?
I believe we're just entering the next phase of the crypto bull cycle, in my opinion.
Okay.
I do think the crypto winter is over. I think we're really starting to rhyme what's happened in these past Bitcoin and digital asset bull markets. And historically, if you look at these cycles, Usually the 6 months leading into the Bitcoin halving and 12 to 18 months post Bitcoin halving are the best times to be allocated to the space. And I believe that's the part of the cycle we're entering now.
Okay, let's talk about the Bitcoin halving. Some would say it's really too easy to just take a look at the historical price pattern and do what history has done and buy right before the halving. If something is too good to be true, it probably is a criticism towards that strategy. How would you respond to that?
So I think the halving cycle has never been priced in, and I do not think
Oh,
this upcoming one is priced in either, in my opinion. So if we look historically, every time that we've had a Bitcoin halving, that 12 to 18 months post halving window, like I noted before, is when we see Bitcoin all time highs. The difference between this one and the past halving cycles is we have a multiple of confluence of events that's going to be occurring at the same time. One, there's the halving, whereas today there's 900 Bitcoin produced each day and issued into the network. Come April, when the halving occurs, that'll get cut in half to 450 Bitcoin that are produced by the network each day and issued into circulation. So if this ETF demand continues, in addition to that halving, we're going to have a huge supply demand constraint, and there's going to be way more demand than supply available, which should further drive price over time. In addition to that, another part of this confluence of events that we have is that FASB, the Financial Accounting Standards Board, who is responsible for governing the rules for GAAP accounting, recharacterized how Bitcoin was viewed as a public corporation's balance sheet asset in terms of how you can actually market on your books.
yeah.
Formerly, it was an intangible asset. So if you bought it for your treasury reserve strategy and Bitcoin went up in value, you couldn't show that appreciation. But if it went down in value, you had to mark that against your earnings. So it was actually prohibitive. Now they've made it that Bitcoin and digital assets are fair value assets. So if you buy Bitcoin and it goes up in value, you can show that appreciation on your books, just like you would have to show it if it went down. So you can mark the asset at its fair value. The reason that's important is now it opens the door for more public corporations to take the MicroStrategy approach and start allocating some percentage of their treasury reserve strategy to Bitcoin. And I'm really interested for the upcoming quarterly earnings calls that we'll hear from some of these public companies, how many of them started to allocate to Bitcoin.
Yeah, accounting benefits aside, Brian, what are some of the advantages of holding Bitcoin on a corporate's treasury?
Well, if you look historically, it's been the best performing asset, I believe, 10 to 11 out of the last 15 years. And so with that, as a public corporation, you need to take your cash flow and figure out where's the best place to invest it to generate longevity for your company. And I believe what Michael Saylor's team did at MicroStrategy is when they were going through the same decision-making process, his team went and analyzed everything in the market, stocks, bonds, real estate, private equity, venture capital, everything they could find to figure out where should we be putting this excess cash flow as part of our treasury reserve strategy. And the conclusion they came to is that the most valuable asset in time will be Bitcoin. And I think more and more public corporations will notice this and begin to allocate some percentage of their portfolio to it.
I understand if a company needs to have Bitcoin on its books because transactions for their goods and services can be done with Bitcoin. Like that makes sense as a strategy. But if you, Brian, as an investor, if you were to look at a company as a potential investment, why would you want that company to invest in Bitcoin? I mean, you could do that yourself, presumably, right? Wouldn't you want their capital to be allocated towards actually generating ROI for their operations, whatever that may be?
Of course. And I think that's something that would be the primary thing that we would look at as an investor in a private business.
Sure.
However, if that company is generating excess cash flow and they're looking for a place to store it so it has a long-term store of value, they may want to consider putting it into Bitcoin. I think that's a smart decision. I think if you're growing an earlier stage business, you want to take as much as you can and reinvest it for growth of new products and new customer channels and marketing and things of that nature. But if you do have some excess cash that you can have sit on the side for a bit, Bitcoin is a good place to store that.
Do we have any idea as to what kinds of companies may add Bitcoin now to the books after this FASB rule has been changed?
I would expect more of the technologically savvy businesses. Like we know Tesla's done it. We know MicroStrategy's done it. There's some insurance companies that have done it. Square businesses like this, Block. I think that over time, it's largely going to be the tech-first businesses, probably the social media engines, the businesses that are advancing in artificial intelligence. I think we'll see more of those types of businesses that will begin to take some percentage of their treasury reserve to allocate.
What about stablecoins? Would you anticipate stablecoins to be added to people's treasuries? I mean, stablecoins have become more and more popular as a B2B medium of exchange, more so than Bitcoin now on many platforms.
Yes, I would. And the reason that is I believe stablecoins are going to start to integrate much more prevalently within society and with the banking system in general. Right now, we're seeing a stablecoin bill that's moving through the legislation. And if that ultimately gets approved, that's going to open up, trillions of dollars of market opportunity on an annual basis with the liquidity channels and how quickly you'll be able to move assets worldwide. And so with that, as a business, if you have cash on your balance sheet, you're ultimately, I think, going to convert that into stable coins because the liquidity opportunities there are going to be so much more efficient.
Last year, Standard Chartered Bank put out a report expecting the Bitcoin price to reach $100,000 by the end of 2024. A lot of that forecast was based on the fact that a Bitcoin ETF could be approved. At least that was the underlying assumption. Now that we have seen the approval take place, Bitcoin hasn't quite reached $100,000 yet, although it has surpassed new all-time highs very briefly. Could $100,000 be realistic for the end of the year, you think?
I do think 100,000 is very realistic before the end of the year. We use a series of models to help us understand if Bitcoin is overvalued, undervalued, or fairly valued. One is trendline analysis, and that shows us that Bitcoin today should be worth more than $130,000. But we know it's trading in the high 60s right now. And so according to that model, it shows it's undervalued. If you look at Plan B stock to flow model, which basically takes the amount of Bitcoin in existence and measures it against the Bitcoin being produced into circulation, that shows that Bitcoin should be over $100,000 today. And so I do think it's very possible that we could see that over the next year. I actually would look at that more as a floor as opposed to the ceiling of what we could see over the next 12 to 18 months.
Without divulging too much detail, can you just high level explain how the model works? I mean, I understand if you're building a cash flow model like a DCF model and you value a stock, for example, based on future earnings, you could say, well, it's undervalued. The stock should be trading at $30. It's only at $20. How can you apply the same kind of analysis to Bitcoin, which in itself doesn't generate cash flow?
Sure. So in the stock to flow model, this is how you would measure a commodity. So it's used for things like gold, palladium, scarce assets that are commodities. Well, we know Bitcoin is a commodity. We know exactly what Bitcoin's issuance schedule is. We know exactly how much Bitcoin has been mined and rewarded over time. So what the stock to flow model doing is it's taking that existing stock of Bitcoin that's in circulation and it's mapping it against the amount of Bitcoin that are released by the network each day. And what it does is it looks at the demand over time and it basically creates a price appreciation model for what that would look like. And what that model shows us is that over this next halving cycle in 2024 into 2025, when we enter that 12 to 18 month post-halving window, that this has the opportunity to go upwards of $1 million during this halving cycle. Now, that seems like a lot, but if you look at the math behind the model, that is how the model plays out.
Sorry, this next halving cycle that's about to take place in 2 months?
Correct. Yeah. Within the next 12 to 18 months, the model says it could reach that. I would look at that as a ceiling. As a floor, I would look at, the 100 to 200 range.
Right. I mean, that's 10x in a couple of years. Has Bitcoin had a precedent of doing that within that time frame?
Yes, Bitcoin has a precedent of definitely increasing very quickly over short periods of time. Here's an interesting statistic. If you look historically through the last 4 times that Bitcoin reached an all-time high, within, I think it was like 14 days after it reached the all-time high, it doubled in price. It was either 14 or 18 days. So if that plays out again, that would mean that Bitcoin hit 73,000, last week. If it jumped to 140, that would basically mimic what's happened 3 out of the last 4 times.
Right. I'm presuming your model doesn't factor in a correlation with the stock markets. Is that correct to assume?
No, this is purely just measuring the commodity of the supply demand component.
I understand. And would you, in your analysis, just as an investor, take into account potential moves in the stock market? Suppose we get a huge market correction that could weigh down on sentiment for Bitcoin, for example. I'm not saying it would happen, but I'm just saying that could be something to consider, right?
Yeah, of course. I think you want to look at all different data points that you can that could be important for the asset class. Macro conditions could be important. We can see what's happening with the stock market. That could be important. And if we look at this model actually during the last halving cycle, it noted that Bitcoin should have reached $100,000. Well, Bitcoin didn't. It reached just under 70,000. But if you look at it, what's interesting is if FTX would have actually been going in and buying the Bitcoin that customers thought they were purchasing, it's very possible that Bitcoin would have gone over $100,000. But what we've learned is that they were not doing that. people thought they were buying Bitcoin. They were taking the cash and they were sending it to their sister company or doing something else with it they shouldn't have been doing. But if they would have actually been buying the Bitcoin that the customer demand was creating, it's plausible that Bitcoin would have gone over 100,000 and actually been much more aligned with that stock to flow model.
Just on that note, do you think that it is possible that Bitcoin could decouple from the NASDAQ almost entirely in the foreseeable future?
Yeah, I do. I actually think that's very possible because this is an asset unlike anything we've ever seen before, where the supply is not changed by the demand. Right? We know exactly what supply will be. We know it's completely scarce and finite. Whereas all other assets, in terms of a commodity asset, we're still finding more gold, we're mining more oil. Like we're still creating more of it. But Bitcoin's a scarce, finite asset, so it's inelastic to the supply.
Okay. People have talked about a few existential risks potentially facing Bitcoin. One of them is quantum computers potentially having enough power to hack the blockchain network itself, and the others are the other risk is the 70% of the Bitcoin not being moved, like you mentioned earlier. A lot of those are people with large amounts of Bitcoin who could dump at any time. Satoshi Nakamoto owns a significant chunk of Bitcoin under his wallet. We don't know who that is. That hasn't been moved in a while either, but there's a potential that could be moved. Could you evaluate both of these risks?
Yeah, so the initial risk that you noted about quantum computing. So our team has actually spoken to the Bitcoin core developers about this exact topic, and their response to us was that will never happen. And the reason is because the SHA-256 is the encryption security on the Bitcoin network today. And if the quantum computing ever got advanced enough to get close to cracking that, then the Bitcoin developers could actually work together and turn up and double that SHA-256 to SHA-520, whatever it is. And so that would then double the enhancement of the encryption on the security. And they could keep turning that switch over and over and over again. And their ultimate response to us was there's not enough electrons in the universe to actually hack it once you go up to a certain level. And so that's something I find very interesting. What was your other point about the people dumping large percentage of Bitcoin?
Yeah, there's just so many hodlers and whales of Bitcoin that could potentially move the market if they all sell, not at the same time, but just en masse. I just name dropped Satoshi Nakamoto as one example of a wallet that hasn't been moved in a very, very long time. He supposedly owns anywhere between 750,000, he or the entity, whoever it may be, 750,000 to 1.1 million Bitcoins. We don't know exactly, and we don't know if they could be moved. I'm just saying if a large amount of Bitcoins were moved at any given time, it could have dramatic impacts on the price.
I think that's definitely true if that were to occur. I don't see that occurring. And the reason is because for somebody to go and sell that amount of Bitcoin today, what are they going to sell it for? I think is the real question. Would you want to sell that Bitcoin for dollars that are losing their value each and every day that we hold them? Where are you going to put that? And as Bitcoin has gained adoption over time, I think each and every year that we move through the adoption and evolution of this asset class, it becomes less and less likely that an event like that would occur, because we're reaching a point, in my opinion, where today we're in a unique stance where we can actually trade dollars for Bitcoin. But I believe years into the future, we won't be able to do that. I think you'll only be able to earn Bitcoin through your energy and your labor.
Okay. Good rebuttal. Two counter arguments to why the Bitcoin ETF is positive for Bitcoin that I've heard. The first thing is that the Bitcoin ETF provides more avenues to actually short Bitcoin, and the second would be that it makes it less decentralized, so to speak. I know that's not really the definition of decentralization, but it makes the concentration of holding Bitcoin higher, meaning that more institutions hold a larger percentage of Bitcoin, and so volatility could actually increase, not decrease because of that. So could you address these two concerns?
Yeah, so I think that from a shorting component, that's a natural evolution of any market. I think that's going to happen regardless. What we've actually seen in recent weeks is there's a lot of people that had very large short positions, and they didn't do a great job of accurately projecting how Bitcoin was going to move. And when Bitcoin started to move quick, they got burned really bad. They had to close out those short positions. We saw a lot of leverage get wiped out of the system. I think that's just part of the natural evolution of the asset class. We're going to have points in times where people are going to take large short positions. Bitcoin is completely unpredictable in regards to how the asset moves. And then sometimes people will get burned. Sometimes maybe they get lucky. But I've never seen people repeatedly be able to project Bitcoin's price movement in short periods of time ever. They may get it right once or twice and get lucky, but it's very, very rare.
People have talked a lot about the Bitcoin ETF and potentially Ethereum ETF coming out. That's been exciting for investors, but we haven't heard a lot in the news about new applications for either Bitcoin or other layer twos out there. What could we expect going forward for this year and next that could be exciting for you at least?
So I think three main things that are being built on top of Bitcoin that are pretty exciting. One is the Lightning Network. So the Lightning Network is a solution that allows people to transact instantaneously that then later settles on the Bitcoin network. But that's going to be very, very powerful in terms of creating Bitcoin into this global monetary system over time by being able to have instantaneous transactions. Another one is ordinals. So ordinals are basically NFT concepts built on top of Bitcoin. And a lot of people think of NFTs as digital art because that was the first big popular use case that came out. But think about an NFT also in terms of any intellectual property. Imagine if I could create a patent, implement it within an NFT, and then license that NFT on the blockchain to a corporation that wants to leverage the IP within that patent.
Right.
Like there's a huge amount of use case and opportunity there. In addition to that, we're seeing inscriptions or these smart contracts that are built on the Bitcoin blockchain. So what we just don't know yet is what if in the future we have this robust digital asset ecosystem, but the advancements on the Bitcoin protocol get so good in terms of all these use cases that the rest of the digital asset ecosystem collapses on top of Bitcoin. And the way to think about this is in the early days of the internet, there were a lot of competing protocols for what was going to be the base infrastructural layer for how internet applications would be built over time. Okay. The one that ultimately won because it gained the most adoption is IP, Internet Protocol. That's what everybody uses today. So in the future, it's very possible we'll have thousands of different blockchains for different use cases, or it's possible that the whole crypto asset ecosystem collapses on top of Bitcoin. It's just too early for us to know what's going to happen there yet.
Okay. I have one final counter argument for Bitcoin that I want you to address, and then we'll talk a little bit about your company, Off the Chain Capital. People have talked about Ethereum having really good supply-demand fundamentals, especially post-merge when the supply kept getting eroded. Actually, it was depreciating as an asset, not inflating, and so deflating rather, not inflating. And so people were expecting the price to go up because supply was getting wiped off the system. But actually, the reverse happened. Post merge, the price collapsed and it hovered around $1,200 to $1,600 for a while until it spiked up dramatically late last year and this year, which had nothing to do with the merge because that already happened, a year and a half ago. So the argument that just because a token or a project has good supply demand fundamentals doesn't necessarily mean that the price would go up. How would you challenge that?
So I would challenge that to say from an Ethereum standpoint, I think you have to look at it very differently than how you would look at Bitcoin.
Okay.
Ethereum, I view largely as still an early stage software business it's gained huge market share. It has tremendous value in applications, but it has a lot of competition as well, right? Like there's Cardano, there's Solana, there's Binance Smart Chain. There's a variety of these protocols that are gaining market share on Ethereum. So they got to compete against that. In addition, the Ethereum network and some of these staking networks, if you own a predominant majority of the asset, you largely control that staking network and that protocol. So there is the perception of decentralization, but if you're the Ethereum Foundation, as an example, and you control a large amount of this asset, you have a lot of authority over what happens with that protocol. That's what makes Bitcoin stand out and makes it so unique compared to other digital assets, is that there is no centralized control on that, right? There is no way that a single person or a small group of people can go in and basically change the infrastructure or change the governing decisions and authority for the Bitcoin network. But you can do that with some of these other proof of stake protocols.
Okay, interesting. So basically, there are different things. We shouldn't look at Ethereum as an example of what could happen to Bitcoin.
Yeah, and I think there's different use cases, right? So Bitcoin's trying to solve, in my opinion, what's the largest issue facing our present society today, which is the excessive printing of money and the ripple effects of what occurs from that, right? Ethereum is basically digitizing contracts. It's the simplest way that I look at it. So it's a completely different use case. It's possible that that technology will get built on Bitcoin over time. We're seeing the early stages of that, but I look at them very differently in terms of what their utility is within the ecosystem.
Okay. Tell us a little bit about your company, Off the Chain Capital, what it is that you do and the research that you've done.
Yeah, so Off the Chain Capital, we're a registered investment advisor with the SEC that focuses on trying to find unique ways to buy $1 worth of blockchain assets for 50 cents. So we are deep discount value investors, very traditional Warren Buffett, Graham Dodd style of investors in this new technology sector. And so the way we go about that is really split between two parts of our investment universe. One is in private equity, where we're looking for very mature businesses in the blockchain space. We like to find businesses that are profitable, they have minimum or no debt, they're post Series A round, so they're more mature. And then we're looking for forced or motivated sellers that are seeking liquidity, they can't find it, where we can go in and attempt to capture those shares at a discount from where they're intrinsically valued. On the other half of our portfolio, we look at what we characterize as mispriced digital assets. So that could be opportunities where we're trying to find ways to acquire crypto assets at a discount. As an example, we may go into a bankruptcy proceeding and find bankruptcy claim holders where Bitcoin is the underlying asset that they have within their claim and offer them liquidity for that claim in an effort to buy that claim at a discount from the value of the Bitcoin that's inside of it. So that's another example of a strategy that we may implement.
Okay. I just want to bring this up. You made a comparison to Warren Buffett, which is ironic because I understand your style, value investing, but Warren Buffett famously hates Bitcoin. I think you know where I'm going with this. He actually said, I just pulled up a quote a couple of years ago. He called it rat poison squared. His late partner, Charlie Munger, doubled down on that claim. Warren Buffett, his words, not mine. He said, whether it goes up or down the next year, 5 years, 10 years, I don't know. But the one thing I'm pretty sure of is that it doesn't produce anything. It's got a magic to it, and people have attached magic to a lot of things. How would you address that? A lot of people share his sentiments still, which is why I'm asking you to address it.
I get it. I understand where he's coming from because I think he's viewing the world in a traditional status quo, and he's not allowing his mind to open for a paradigm shift of what's happening with our financial system today. But one thing that Warren has notoriously been wrong on is technology. If you look back to whenever he was betting against the internet for Encyclopedia Britannica and doubled down on them, that didn't play out too well. He had a big miss on Apple and some of these other technology companies. I mean, he's a tremendous investor. I respect him. We implement his style in this space, but I do think this is something he's incorrect on.
Well, Berkshire Hathaway did eventually buy Apple, so maybe they'll eventually buy Bitcoin. Who knows? But just on that note about Bitcoin not producing anything, how would you respond to that?
So I think that's incorrect. I think Bitcoin, what it's producing, is the most brilliant engineered monetary system that's ever been invented. It's giving us an opportunity to circumvent state-controlled money supply and create it in a hard-coded computer system where we know exactly how the mechanics will play out over time. In addition to that, if you are in a developing region that uses Bitcoin as legal tender to transact, to go buy your groceries or go fill up your car with gas, it's a lifeline for people in some of these jurisdictions because their currency is surprisingly more volatile than Bitcoin. So Bitcoin is significantly a better store of value. So as that is a medium of exchange or a store of value, depending on where you live in the world, I think it's actually producing one of the most unique things that we've ever seen in human history. And I believe in the future, it will go down in history as something as brilliantly designed as like fire or the wheel.
Okay. Final topic, and I'll let you go. Brian, this has been a great talk. Thank you. TikTok is moving to get banned in the U.S. The House of Representatives last week voted with overwhelming majority to ban TikTok. The bill still has to go through the Senate and then to Biden's desk for approval. But Biden has mentioned that, or referenced the fact that if the Senate passes, then he would approve it. So it looks like it's on track to get banned for now. Where do you stand on this debate? Because people are mixed about whether or not it should go through.
I don't think TikTok should be banned at all. I think technology in and of itself is innate. However, how it's used can actually create harm. So what could happen, I think, which would be a better route, is to figure out how to still leverage the product, but do it in a fashion where there's some more control and transparency in terms of how the algorithms are feeding content based on the jurisdiction. There's been some conjecture that a lot of the content that's fed to citizens in the United States is a means of psychological warfare, feeding information that inherently dumbs an individual down or shortens their attention span by watching some of these videos because they're just not really educational in content.
Right.
And that what's fed to individuals in China is much more educational content around science and engineering. And if they're using it as a means to try to create psychological warfare to dumb down the masses of society, I think that's something that really needs to be looked at very closely because we don't want to go down a rabbit hole where people are losing their attention spans and they're believing all sorts of misinformation that isn't true. And I think that just creates the opportunity to really go work with TikTok to figure out how they can create some more transparency around their system.
I completely understand what you're saying. Yeah, we should have fairness across the board in terms of an openness in algorithms. But just to counter on that note, it's the creators making the dumb content in the first place, right? And then if you keep scrolling on that dumb content, the algo is going to keep feeding you that dumb content. So it's
Sure, I understand.
yeah. So people need to just A, stop making the dumb content, and B, you gotta stop scrolling on that to scroll more on the math and chess stuff. How do we not police but regulate a social media platform so that it is transparent, that is safe for every user, and that, of course, there's concerns about TikTok. The biggest concern that Congress is positing is that the information, the data that American users have deposited into TikTok servers, that information is being used by the Chinese government, right? How do we prevent something like that from happening?
That's a tricky question. I don't know exactly if you have a China-controlled company that's then having their product in the United States and people are using it, they're going to have free access to that information and data and analytics in their backend system. And I don't think a company like that's going to willingly just say, oh, yes, here you go, come in and you can change whatever you want, right? Because they've got their own system designed and they have their own goals with the business. So I'm not probably the best person to answer that particular question because I just don't know what would be the most effective way to do it. But I do think that if you're going to be pushing a product in the United States that people are using, maybe the regulators need to step in and figure out a better way to regulate how the product can be used in the United States. Because if we look at US companies that tried to bring products to China, like Google and Facebook, China just banned them, right? And so what people in China did is they logged on to VPNs, accessing different IP addresses so they could still access the system. And so, the banning it is one option, but I do think there's better ways to go about it through regulation.
Yeah, Mark Cuban has tweeted that he believes all social media platforms with users over or under 18, should publish their algorithms openly. Do you agree?
I think that would be very helpful in alleviating this particular problem.
Okay. Where can we learn more about you, Brian, and also Off the Chain Capital?
Absolutely. So Off the Chain Capital, our website is offthechain.capital. So please visit there. You can contact us if you want to. We have educational information on there about Bitcoin, and we also publish the charts that we use to help us monitor Bitcoin stance in the market. And if anybody follows me on Twitter, my Twitter is @BrianDixon06.
Okay. Thank you very much, Brian. Thank you for your time today, and we'll speak to you again soon.
Thanks, David. I appreciate it.
And thank you for watching. Don't forget to like and subscribe and follow Brian in the links down below.